Okay, everyone, welcome for the end of the market wrap up video. I just want to, I see some really important things in the chart, so I want to point them out so everyone's prepped for tomorrow and the rest of this week. And there's lots of different ways to trade this market, but I just want to point out what I'm saying. I think there's some key things going on that might end up tricking people a little bit. So today, let's get into it. Give me a thumbs up. Today in the triple Qs, really strong rally, obviously, in tech across the board. Just extremely strong, massive rally, up 4.5%. I think at one point it was up maybe 5% or 4.5%. Pretty big rally. That's about as big as it gets in the Qs for a daily basis. So the thing is that everybody, when you get rallies like that, it makes everyone feel extremely bullish, and they think that's the end of the correction, off to new highs. We're looking great, and that might be. Maybe that is the case. That's kind of the battle we're in right now. Is that the end of the correction, or is that not? I'm leaning towards it's not the end of the correction, and I know it's hard to feel that way and to position that way after such a bullish day, but I see some things in the charts that just are telling me that that's not the end of the correction. And usually what's going to happen if it is not the end of the correction, there's going to be a lot of people that just got caught off sides who thought it was the end of the correction. They were buying tech today. And then when they start to realize what's going on here, this isn't the end of the correction, you're going to see that next impulsive leg to the downside. So again, rallies, when you have corrections, the rallies that are there suck in longs and create, they basically add fuel for the next leg lower. I'm not saying that we're going to get another leg lower, but I think we will. What I see here in the Qs is, look at this level here. Okay, sorry, my computer's making all kinds of noises. So basically, the level of resistance that I was pointing out was right about this 311, 311 area. We'll just call it 311 flat. You can see where we closed the day. We actually closed at 311.77, and in the after hours, it's down around 311.54. That's too close to call to say that we had an actual breakout. Usually, a breakout, this is just something I think it's important. This is a lesson that it will help people kind of determine whether a breakout is there or not. A breakout typically is impulsive. When you have a resistance level, you want to see an impulsive break, and ideally the close is away from that resistance level. If you just kind of hang around that resistance level, you break above it, you're never going to really stop right on the penny. So when you break above a level, you can chop around it above it a little bit and still not really have a breakout and still roll lower. And that's what I see right here. Basically, if you look at the price action, here's a breakout candle. We break above, the next candle's up, but then that's it. There was really no follow through. The next candle is just kind of down and up and then we close the day, back down near that level. So we'll just call that a close at resistance, because this is not, it's not a valid breakout. I don't have a signal that tells me, okay, this was a breakout. We have an impulsive rally breaking above resistance. All we have is, we traded up to resistance, kind of chopped through it, closing back down pretty much near that level. Yeah, we closed 77 cents above my trend line, but again, this is a $300, ETF. 77 cents, we're going to call that just a close at the level. So in general, we're closing at resistance. If you want to be, if you want to be a stickler, then sure, we did close above resistance. But in my mind, a close right there, so close to it, is not good enough to be a breakout. For breakouts, I want to see impulsive buying, and I want to see, I want to see a big green candle where it closes, far away from that trend line. The gap took a lot of energy to get up there, and then there just wasn't much left throughout the day to really break out above that level. So what does that mean? Well, I think we're likely to gap down tomorrow. that's just a micro call. It's really hard to say. I think we're likely to do that. Now, if we don't gap down tomorrow, maybe we're going to hang out at this level the rest of the week. All right, and then potentially either break higher or fail. But as of right now, we don't have a breakout that I would say is a confirming breakout. So I would look for lower prices. I'm positioned that way. I went home short, and I put a comment in the video today talking about, different ways to mitigate your risk. If you're unsure, you can reduce your size. That's always a good rule of thumb. If you're unsure and you're hesitant on a trade, reduce your size until you're more sure, and you can always add back to a position. And there's no harm doing that. So that's one way to do it. Another way that I like to mitigate risk is I take profit as I roll into support levels. So as the trade works and you roll into support, I take some profit so that when the trade starts going against me, because trades are always going to go against you at some point in time, it's not my full position and I don't give back all my profit. I've taken the profit off the table. All right, so wrap this one up. You can see where we closed right there. I went home short. Let's look at the SPY. Another reason why I like this, look at this downtrend line on SPY. All right, on the hourly, you've got a reaction here, reaction, and another reaction. We're just trending down. Now, it's not a very steep downtrend, but we're continuing to make lower highs. And where did we stop today? We ran right up to that trend line, kind of muddled around, poked above it just a little bit, and then rolled down and failed. Also failing below what looks to be some resistance right here at 387.42. So we closed down at 387.12 or 17, down a little bit more in the after hours, but basically closing right on it. So this is not a breakout. This is a, resistance held, basically. And so until I see something that's technically different, I think that this was just a rally into resistance, and we're likely to going to continue to move lower. Let's look at the IWM. I pointed this out in my earlier video. Here's your downtrend line, making a series of lower highs and lower lows, downtrending. And you can see we rallied right up to that resistance and failed. Also, I've got this uptrend line. Oh yeah, this is also look at this one. You can see here, see this daily trend line here on this daily chart, where we held that, and then you can see, as far as I can tell, we had a sell signal with a breakdown, and we had an impulsive back test closing right at resistance. All right, so not a breakout. All right, we had a sell signal, which is a break of trendline support, and a full back test, and we're closing right there. I think it's likely we gap down tomorrow in this one. Just to really confirm, let's look at the futures here. Here's the NASDAQ futures, and we'll look at the different futures. So here's NASDAQ futures, all right? So we had resistance right about here at 12736, or maybe just a little bit. It's right in this area, all right? We're gonna say it's somewhere right in there. I put it right here because of this breakdown candle. You've got this breakdown candle right there, and it's about 1274, 12,740. All right, and look, this is not a breakout. All right, it did break above, but at the end of the day, it came back and is back at that trend line. A breakout, you want to see a breakout, you want it to look something like a big impulsive set of green candles closing, maybe up here, and just looks like it's just, it shouldn't come back to the trend line at the end of the day. So we'll see what this does. Maybe there's some more upside, but as of right now, that's what that looks like. I think it's likely this is going to fail right here, and this is going to be a false breakout. It's going to fail and roll lower. Look at the SPY futures. Here's the ES resistance right up here at 3896.75. You can see this held the support back here, held the support here, held the support all through here. Then it was resistance once we were below, broke, and then resistance, and we came right to that and tested it, and it held as resistance as well. So again, doesn't look like a breakout to me. Looks like we're gonna roll lower from here. Here's the small cap futures, the RTY. Look at that, held this support all through here. Then once we broke down, you have a series, you pop it a little bit, but it keeps getting rejected. You know, you pop above here, rejected, pop above, rejected, pop above, rejected, pop above, rejected. This time we just didn't pop above, it just tested it right perfect. And then here we couldn't get above either, we just got rejected. So again, resistance held until that goes, until you see some of those resistance lines and those breakout candles. I think that this rally is, I think this rally is about to fizzle out, and, we might be flat tomorrow. Maybe we don't gap down. Maybe we're flat, and we just kind of chop around flat tomorrow. I could see that as well. Gold, you had a bullish engulfing candle here on the daily chart on gold and GLD as well. So look for more follow through. If gold has another update tomorrow, then that's kind of confirmation that you're getting a reversal, and I think gold's likely to move higher. I think the correction in gold's probably near the end. The correction from back here in August, to me it looks like it's near the end. Lots of people that have been holding gold, I get comments from people saying they're sick and tired of seeing gold go down. That's what corrections do. They wear you out. And so that's why, I look to start buying when I see signs that the correction is over. And I am continuing to add to gold miners. One of the ones that I added today was this WPM, Wheat and Precious Metals. I think they're a silver miner. But here's what I like about it. All right, on the daily chart, you can see this line, this level right here, it's about 37.42, was support for a while. You can see we broke above, and let's see if it was resistance. No, not really. Not really. Maybe you could say it was resistance back here. Let me extend this out. Yeah. The point is, recently it was support. The support right there, then we popped above, held it, support here, then we popped above, came down right there, didn't quite get there, they stepped in early. It was support right here. So lots of reactions around that level. And recently, look what we did. We dipped below it right there, looking like a breakdown or, looking like a sell signal. But when we did that breakdown, we had bullish divergence. See the bullish divergence that I pointed out? And look at the PPO starting to turn back up right here. See it starting to turn back up. You get that crossover, it's going to start to point up. That's confirmation. So we have bullish divergence, and which means this is a divergent low. And I pointed this one out in my, in my videos. And then recently, and then look what we did today. Pop back above. And closing, closing off that trend line. So, again, it's not an all-in long on this one. It closed about 0.5% off that resistance. It's not an all-in long, but the fact that it broke a key support level and has now recovered it is that's something positive. I think that's constructive. So look for more confirmation tomorrow, or look for it to hold this level now. 37.20. It might dip just briefly, but I suspect it's going to hold this level. And if it does, then I think that sets us up for a move all the way back up here to this trend line up around 43. From where we're at now, that's a move of 15, 16%. I like it as of right now. Bullish divergence. The difference between this and me talking about the Qs not being a breakout, look, you have bullish divergence right here on the daily chart. You don't have bullish divergence on the daily on the Qs. All right. Okay, XLF, no sell signal. I just want to kind of reiterate that. Again, there's just no sell signal. Now, I think we're going to get it soon, and likely that's going to come with the S&P 500 starting to sell. Again, the whole thesis behind this sell-off that we're kind of working in right now is tech led the sell-off, and now we're going to see that start to roll over into some of the other sectors, such as the financials and energy and the S&P 500. If we don't see that, then potentially this was literally just a tech sell-off, and then there's not going to be a broader sell-off. Again, the way that I played the shorting this market so far has been pretty much all in tech, and those are the ideas that I've been kind of pointing out for a while, because those were the ideas that had the cleanest setups, and so that's why I pointed those out, and they all worked out very well. And so now it gets a little trickier, right? We try to figure out, all right, what, we got the tech sell-off that I was looking for, at least initially, but now we have to try to figure out, is there more? Is there more to this than just a 10% sell-off in tech and then markets just continue to rally. That's the challenge, and it obviously is a little trickier. So I try to point out what I'm seeing to help us try to anticipate what's going to happen. And if it doesn't go that way, then you know the levels to potentially trade off of. Watch energy. All right, here's your energy XLE. Here's the trend line. You can see we sold off and closed the day right on support. Watch for a break of support, a gap down or something like that would signal. If we start to see energy and financials break, look for the SPY to break and look for the markets to start to sell off. Tesla, that's a pretty strong day for Tesla. So this is a breakout, or this is a recovery of broken support. All right, that's what it should look like. So we broke support yesterday, but today they gapped it up and rallied it all day, and it had a really strong close. So again, I don't see anything to short in this thing right now. I don't see a sell signal. I'm stepping on, I'm going to back away from this one because, I had a very profitable short trade in it, and maybe that short it has played out for the near term. So nothing on that one. We'll look for different opportunities. And I'll just wrap with this AMD and APPS. AMD, so kickback rally today. Again, there's your broken support going back to 2016. Walk up the trend line. You can see here. Someone asked me why I use log scaling. Just to cover this again. Why do I use log scaling and not linear, or arithmetic scaling? So log scaling you can actually chart trend lines with because it measures the gains in percentage terms. So it's an even move up because the percentage scale just doesn't move. Whereas the dollar, as you move up more and more, you end up putting in exponential scales. So if I take off log scaling, I get something that looks like that. Now, how do I chart that? How do I draw trend lines on that? Unless I'm really narrowing it into smaller time frames, I can't chart it because you get this parabola. You get something like that, all right, and that pretty much always shows up in non-log scaling. So the reason why I like log scaling is I can incorporate, past history and really look at longer term trends in a more organized fashion, and that's what this does. See how organized that is? So that's why technicians use log scaling. And you can see we broke the trend line support right there. As I zoom in, we broke it back to, and we're starting to back test. We closed basically at the 200-day moving average right there. Probably slightly recovered it. Let me look. I mean, it's so hard to tell. We closed at 78.50 in the 200-day. I can't. Let's see here. Where's it? The 200-day was at 78.53. We closed. We closed to the penny on the 200-day moving average. So again, I think that's likely where resistance is going to be, but we'll see. But the point is, even if they recover it and do a kickback rally, we're still likely going to get rejected by this trend line that was broken. A recovery of the trend line and we start to move up, then you stop out of this trade. So that's how you play that one. Apps, you can see 2020 lows, broken trend line support. There's your trend, a nice bullish channel. We just broke. There's your sell signal. Really, your sell signal was there, but we got confirmation, more selling. Kickback rally, I think we're likely probably gonna dance around this. Maybe run up into a kickback. I don't quite know. I don't know if it's gonna just break or do a kickback. All I know is that we broke major support, and the probability of failing on kickbacks is high. So I see that as very little potential to move up and a lot of potential to move down. Next line of support down here at 42.50 area, and that's all I got. So I'll get this out here and I'll catch you guys tomorrow.